afternoon, everyone. Thank you for your patience. We'll get going, and I know everybody's eager to enjoy the evening after a long day. This is the Invest in Greece International Investor Perspective Panel. In my view, over the years doing this here, it's the panel that is at the core of what this conference is about, because as we heard earlier from the Mr. Georgiadis and the other speakers, what we all care about is international foreign investors coming to Greece, and we're very lucky here to have some of the top investors with us and hear their perspectives. So with me in the panel we have Dimitrios Athanasopoulos, founder and managing director of AXIA Ventures Group, the largest and probably most successful independent investment bank in Greece, and also Italy and the US. Stelios Theodosiou from H.I.G Capital, Alex Fotakidis from CVC Capital, both really substantial investors across various sectors, and we'll go into more detail about their perspectives and their experiences. And then we have Costas Papamantellos from RWE with a focus on the energy sector and renewables in particular, and Panos Xenokostas of ONEX Technologies with substantial investments in the shipyard sector in Greece. So we'll be touching across all of these themes, but I think it's very important to note that, you know, the breadth and diversity of these sectors and assets that this panel has touched upon and invested over the last few years. I remember doing this a few years back, and pretty much all the panelists were doing non-performing loans and nothing else. So it's really, really great to see proper growth investment coming into the country. And with that, I'll start with Dimitri from the advisory side, and wanted to get your perspectives of where you see the current opportunities and the kind of observations for the next year.
Thank you, Panos. Thank you, Nico and Olga, for an excellent conference again. As you can see, I think from the panel, the very interesting thing in Greece right now is the complete change of the type of capital that is invested in the country. So, you know, we have strategics, we have private equity, we had a few pension funds actually this year, and generally, you know, a lower cost of capital looking at the country with the perspective that basically Greece is not what it used to be. There's a lower risk and basically lower cost of capital, higher and longer investment horizon, which I think is what the country needs. In the last decade, we had a lot of investments that were very transitionary. They were necessary in order to process, you know, the distress and the problems that existed in the country. But now I think we're putting the foundation for something that is more sustainable and real, you know, for the future. As far as sectors, obviously energy is a big point of interest this year. That's a global theme, but Greece has a leading role now. There's a lot of things that are happening, not only on generation, on renewables, on storage and transition. I think potentially this has the opportunity to become one of the main sectors. I would dare to say as big as tourism potentially, since, you know, the move away from Russia right now in Europe is something very significant that Greece can take a leading role and potentially build in the next decade. Besides energy, we see a lot of movement in infrastructure. There is a lot of things that the government is finalizing vis-a-vis the privatization agenda. As well, you know, we have the shipyards, we have the ports, we have the airports, some other concessions. We had the grid. So we're continuing to see fundamental investments that can create the base for more to follow.
And let me ask you, I mean, there is a lot of discussion about the upcoming elections. We obviously have a very positive trajectory despite the broader international economic environment. Do you see that the upcoming elections posing a threat or a risk to the ongoing investment theme?
Listen, investors always, I think it was said again and again today, They would like to have a stable outcome vis-a-vis the political stability and continuity that exists. I think, irrespective of the outcome, we have moved away from the very, let's call it, volatile and high-risk times in Greece. That being said, I believe that the current government has done tremendously good work. The polls look, I think, good, even if it's not from the first round. But most probably we're going to have continuity.
Okay, great. Switching to Alex and Stelios a little bit to hear their perspectives. So you both have invested across many sectors, but kind of you're now probably 3-4 years into your investment in Greece. So looking back at the time where you were deciding to enter the country and start taking advantage of the opportunities and doing kind of a retrospective, and I'll start with you, Alex, how would you evaluate that period and where you are now?
Hi, Panos. Hi, everyone. I think a lot has happened in the last 6 years since we started investing in Greece. Back in 2016, I think we took a view that probably we had reached the trough, and actually we were starting to see early positive steps, and we decided to invest in healthcare, a sector that we know well. We continued investing in that sector through 2018, 2019, and then at that point I think we started also thinking more long term around the country, and we opened an office in 2020. And then obviously we had COVID, which we clearly didn't predict, and then we had the war, which we didn't predict, and we have hyperinflation and the energy crisis. And so it's interesting that despite all of that volatility in, I would say, almost the last 36 months, we have invested now $1.5 billion of equity across 5 main sectors: healthcare, e-commerce, food and beverage, insurance, energy transition. And actually, 1.2 billion of that has been invested during that period of volatility. So from 2020 to 2022. And I think one of the reasons why, despite that volatility, we have increased our exposure is that continued improvement that we've been seeing. And I think maybe the previous government was walking in the right direction. I think the current government has been running in the right direction and has been dealing with all the problems that it has faced really well. And I think that's one of the things also we've seen in our companies, and it's been proven again in 2022. We're generally on track versus where we expected to be, which I think is remarkable given all the volatility. It shows the resilience that we now have, and maybe some of that resilience was even built during the crisis before. And also it shows that there's a lot of AQ, I would say, in our companies. By AQ, I mean adaptability. I think that's what I've seen in our management teams and in our companies, the ability to adapt to that volatile environment, whether it's hyperinflation or energy crisis, or even dealing with the way the consumer reacts to all of this. And I'm really, really pleased sitting here today in December, looking back actually at 2022, how our companies, and I think generally the market, has performed, and actually, even though I expect 2023 to be difficult, actually we're setting up our companies to continue investing, whether that's add-ons, whether it's CapEx, and actually we want to take advantage of that. So I'm interested in your perspective as well, Stelios. Hopefully similar.
But sorry, before we go to Stelios, I just want to make one remark that is really fantastic to see investors like CVC and others we heard earlier, JP Morgan, who are not only investing in the country but are setting up offices there, they're hiring people, investing in the intellect and the Greek working force. So this is really something we should all be cheering Stelios, your perspective?
Yeah, good evening, everyone. I think I may spoil your story a bit because I have to say, I have to make a confession. For me, at least, when I initially invested in Greece, we started our investment journey in the country in 2017, 5 years ago. It was more of an opportunistic play. Back then, we saw Greece as a contrarian play. We just felt that, to the point that Alex made, I agree fully that we thought it was the right point in the cycle. And when somebody looking back at the corporate and asset valuations, even adjusting, for back then at least, the significant risk premium because of the sovereign risk of the country, one, without being too scientific, could see actually there was a discount that couldn't be justified. And some of that had to do, quite frankly, because of the void of investment capital coming to the country. So with that in mind, we decided to invest in 3 sectors. One is CRE, commercial real estate. The second one was hospitality. We have to remember Greece is a naturally beautiful country. You know, we have more than 1,600 kilometers of coastline, of which the vast majority is sandy beaches. And as much as Erdogan might like to claim otherwise, we still have 200 inhabited islands in the beautiful Aegean Sea. The problem was the infrastructure, the poor infrastructure of the country, but that has been changing. And the third one was logistics, which in a way we invested in, obviously, the Asian and EU trade route, because the other strong, I think, part of Greece is the strong geopolitical position of the country. And through that, we wanted to basically invest in the infrastructure of the country and bolster the country's positioning in the global logistical map and capture some of that trade throughput. We got lucky in the sense that, as much of a tragedy as it was in the logistics map, what happened was there was along with the energy map, we saw that basically the logistics map was also redefined. Without boring the audience with a lot of technical details, there are 3 main trade routes that connect Asia with Europe. And one of them, the North Asian route, has been obviously severely disrupted through the Black Sea. So what we have seen an increase of throughput into the country, and it would be a shame for us not to take advantage of that. Not just as investors, but predominantly as Greeks and as people who like to see our home country shine when the rest of the Europe really suffers. I will agree 100% with my friend Athanasopoulos that 2023 is going to be a challenging year. But I honestly think I've been an investor for almost 2 decades now, and I think it's the first time that I actually see my home country being on the right side of the spectrum in terms of where I see, not just in terms of GDP growth, but where I see the country, how they will be performing in 2023 compared to the rest of Europe. Some of that has to do with the catch-up effect, given the fact that Greece has, for the past 10 years, been following a different cycle to the rest of Europe. But I also think that a lot of it has to do with the latest reforms that especially the current administration has taken steps towards the right direction to insulate the country from exogenous shocks. Not that because they had the crystal ball, it's just because it was the right thing to do, and we're now seeing that this is playing out. I mean, it's in turbulent times that that separates the wheat from the chaff. So I'm happy actually that we've invested in the country. We'll continue to invest in the country. And I will make the last remark that even though we're a private equity fund and we're not a VC investor, we feel so strongly about the country that we've actually set up 3 different companies from scratch. What was an idea on a napkin? Obviously there was a huge capital base behind those companies, and we decided to actually invest into creating new ventures into those sectors to actually support our investment thesis in the region. So what started as a contrarian play turned into a growth play. What started as an opportunistic play is now more of a strategic long-term play. And we'll keep investing in the region, and hopefully we'll see it playing out.
Oh, fantastic! And it speaks volumes about the resilience and prospects both of the Greek economy. But talking about resilience, when I saw the panelists that I would have here today, I was super happy to see Panos' participation, because ever since I was a child, I always remember reading in the news like story after story about failures of the shipyards and strikes and distress and administration procedures and a very troubled sector. So Panos, talk to us about ONEX and about your journey into the investment, first with Syros and then with Elefsina, and the steps you've been through in trying to bring that back to life, that fantastic sector.
Okay, so back in 2018, the three biggest shipyards in Greece, representing the 95% more or less of the sector, were actually closed and bankrupted. Back then, Neorion Shipyards, when we were first involved in 2018, was consisting from 180 unpaid from 3 to 5 years employees in the island, 78 million debts, fully scrappy, the floating tanks were sinked, and actually nothing was operating. In 2022, in Syros Shipyards, we have already serviced 350 ships up to Panamax size. Imagine that from 2008 to 2018, the three biggest shipyards had serviced in total for 10 years 100 ships, which is actually the average of what we do during a year in Syros. We have already achieved 100+ million euros from international shipping as revenues. Already invested 20 million for CapEx improvements, 10 million paid to employees of Syros from previous ownership, 5 million to the state, and in January of 2023 we're gonna have the official ceremony opening alongside with Cisco and the region of North Aegean of the first maritime center of International Center for Maritime Innovations based in Syros. In February, we will open for the first time after 30 years in Greece in Syros, in our shipyard, alongside with the Ministry of Education, the first school teaching new technicians because we are short in workers. We have up to now up to 600 people, 500 based in Syros, and 100 coming from other places because there's no one there to support our growth. Now, in Elefsina, a month ago, we achieved a deal between us, the state, the three bigger banks, the Hellenic Navy, the workers, 100% of the workers, for the restructuring and acquisition of LFC shipyards. The situation there was even worse. We're talking about more or less $500 million debt, 600 unpaid employees, the same scrap, and they have not for years get involved in commercial activities in shipping. So we made that deal, and a week ago, the very first ship from Mr. Papas, Starfalk, a very good friend and great customer of ours, brought the very first ship. So we start doing business again there. The plan for LFC Shipyards is to go with an average of 200 ships per year, up to Aframax, maybe Suezmax size, and we're gonna also focus in supporting the energy transformation of Greece and the region by getting involved in offshore wind farms assembly manufacturing and oil rings, whatever is needed to get done on offshore. And of course, we have a very strong in the shipyard defense sector, which through deals and agreements with Fincantieri and other leading companies around the globe, we will gain the time that passed in order to have the needed know-how transfer to get involved in new buildings sector. So closing, because a lot of people are asking, what did you do? How did you change? What was wrong? Allow me to say that because shipping is international, actually, when you start a business, you try to solve a problem, right? But for ship owners, they had, and they should, have choices. So actually, we have to solve, not to solve the industry, but the Greek shipyards problem. So the strategy was to give them an offer that they cannot refuse. So we create a family-friendly environment, nothing with strikes and all this kind of stuff, quality because the technicians were there. And in order to achieve what is needed, meaning pricing, we couldn't go below countries like Turkey because Greece is not a low labor cost country. But we could focus on speed. So the name of the game was speed. We do things faster than other shipyards. That's money for the ship owners, Greek ship owners, and I'm only to say that they trust us. We are very honored about that, and we are very lucky we have the #1 shipping industry running by Greeks.
Well, this is fantastic. This is contribution in the real economy. And I want to make sure the audience understands here something you told me. Explain, who are you competing with? Like, you have now 2 different shipyards. You're not competing domestically in Greece, but you are trying to get volume and market share from where? I think that's very important.
Look, because in the past they never focused in what the business is. So we're not competing against each other. We're competing, it's the national market, so we're competing against other shipyards in other countries. Actually, what we do brings more business to other shipyards, smaller shipyards in Greece. It's like the banking system. When you say neighborhood, the neighborhood is full of banks. Why? Because they're attracting the customers. So that's what we do. We are not, things that we've seen in the past in Greece, Karamagas against the Xenokostas, this is a joke. This will never happen. This is all working together in order to bring this industry where it belongs, to the top.
Fantastic. We wish full success with this endeavor. Costa, you will allow me, because in the theme of shipping and being #1 maritime power in the world, we deserve to have a very strong industry in the shipyard sector. But I want to do a small detour and go back to Dimitri and say, what would it take to also become a shipping center internationally from the capital markets perspective, which I know is the dream for many of us. We've been working at it and we've been trying it with government, ethics, advisors. What is missing? What do we need to do?
Listen, this is a little bit more difficult. The capital markets and shipping is not a very large industry globally speaking, right? Meaning most of the shipping industry is funded by the banks and ship financing companies, which tend to be international. That being said, I think there's a lot of things that we can do. Most of the ownership at this stage is based in Greece, so why not create a much bigger ecosystem where you can have more parallel services, industries, financing providers that are based around, Piraeus or Athens, similar to New York, and overall finance. For that to happen, there has to be a very concentrated effort between the government, the framework, the taxation. There has to be definitely some incentives in order to make people feel comfortable to establish such center in Greece. Now, as far as the stock market and the bond issuance, there was a turn of obviously issuing Greek bonds. There was an actual arbitrage, I would say, and it came from a good and a bad place as well. Most of these shipping companies would raise capital at very expensive terms here in New York at 10% plus, and there was an opportunity to raise capital in Greece with 3%. So obviously, shipping owners are very smart. They made a move and they took advantage of it, and it happened. But that can create a base to build on. We have to create a market again that is bigger, it's more liquid, with more participants, and I'm sure then more people will participate.
Perfect. Costas, thank you for your patience. Tell us a little bit about, we heard a lot about Greece becoming an energy hub, and renewables is a key part of that strategy. Tell us a little bit about RWE and what you saw in terms of investing in the sector in Greece.
Nico and Olga, thank you for the invitation, and thank everybody that is still here at this time of the day. Before I answer the question of why we invested in Greece, let me put it a bit in the context of RWE's kind of global investments in the space. So we are a leading renewables company, and we are committed to invest up to 50 billion by 2030 in traditional renewables like onshore wind, photovoltaic, then less traditional like offshore wind, batteries, flexible power generation, hydrogen. More specifically, talking about onshore wind and photovoltaic, by 2030 we will increase our generation capacity from 7,000 megawatts to 20,000 megawatts, and in offshore wind from 3,000 megawatts to 8,000 megawatts, out of which 1,000 megawatts is going to be offshore floating, which is relevant also for Greece. So, as a company, we have a presence in Greece since 2021, and we are committed to keep supporting the energy transition of the country. How do we do that? One is through two partnerships we have. One is with PPC Renewables, and one is with Hellenic Energy. And the second is, in effect, through our experience and how we bring as a leading renewables company. More specifically, on the two partnerships with PPC Renewables, we are jointly, and it's a partnership on equal terms, developing, constructing, and operating a portfolio of up to 2,000 megawatts. And this is where this comes in the context of RWE increasing globally its generating capacity from onshore wind and photovoltaic from 7,000 to 20,000. This means actually that Greece is for us the second largest solar PV pipeline in the world after the US. The projects are in various stages of development, but in the next few weeks we'll actually commence construction of the first projects. To put some numbers behind in terms of capital to be invested, we're talking about over €1 billion over the next 4 or 5 years just for the solar PV projects. The second partnership, which is with Hellenic Energy, we announced the cooperation in July this year, and we announced it a few days before the Greek government announced its target of 2,000 megawatts of offshore wind to be installed by 2030. Again, this is a 50-50 joint venture, and we aim to gain a substantial share of that 2,000 megawatts by 2030. So why Greece versus other countries? That's the question. And I think Greece has a clear commitment towards phasing out its thermal generation capacity. Primarily, I'm talking about the lignite over the next few years. This leaves a lot of room for investing into renewables. There has been underinvestment over the past years, and so this allows, in effect, global renewables players to have a substantial pipeline. That's important. We need scale. That's number one. Number two is over the past few years, the permitting process for traditional renewables has improved significantly. So you actually start a process and you know roughly what your timeline is. Obviously, the country has great sun and wind conditions, and there were also partners available for us to be able to facilitate our investment schedule.
Nikos Stathopoulos commented earlier that the enemy of good is great. What do you think are any changes that would need to take place in the framework governing renewable investment in Greece to further enhance sort of that sector and
Good question. Look, it feels a bit like talking about solar PV and onshore wind is more, a very hot topic. The reality is the energy transition is going to be, an investment across various technologies. And in Greece, there is a framework in place that supports investments into traditional renewables. But there needs to be a framework for batteries. The framework that has been started for offshore wind needs to be actually implemented. It needs to be accelerated. If Greece wants to have even one offshore wind turbine by 2030, it needs to really keep to its timeline to get that framework in place. And hydrogen, there is a question mark for me. What could the role of Greece be? Because there is really not a true demand. The really big volumes of hydrogen come from the industry, the kind of chemical industry and the steel making that do not exist in Greece. But I think a framework even for creating a hydrogen economy in Greece, potentially for export reasons, is also required. Otherwise, the international energy players will not be able to invest. The reality is, know-how is there, capital is there, we need a framework.
Okay, well, I'm sure that this government, as you heard earlier, is very focused on ensuring that the right framework is in place across all sectors. So, another aspect that is very important to create this cluster of investment activities, the financial banking system. And Alex, turn to you. How do you value today? How do you see the banking sector in Greece? And is it able, after all the difficulties it's gone through, to support a CVC in its implementation of its investment program?
The short answer is yes. And to say that actually in all of our portfolio companies where we have financing, we've done it with the local banks. In some cases existing relationships, but also in other cases we've introduced the banks to the companies. And I have to say they've been really good partners. I think we've been quite active in pursuing M&A in our portfolio companies. So we've been acquiring hospitals, we've been acquiring businesses in the food and beverage space, even our e-commerce business, Scrooge, raised the line with Piraeus Bank for a couple of small acquisitions. In all cases when we've engaged with the Greek banks, we found them to be supportive, but not maybe as fast as the international banks. The concept of having only monthly credit committees as opposed to, say, weekly credit committees or ad hoc is painful, but if you can plan ahead and work with them, actually, it's really productive. So we haven't actually needed to go outside of the Greek financing market for some quite sizable investments. And then, interestingly, right now, I think we do have a strong competitive advantage in Greece because Greek banks are supporting Greek companies at, I would say, reasonable rates. So, Greek companies, single B companies, so sub-investment grade companies, can still borrow at 6% cost of capital in Greece. You're right, will be maybe around 2.5%, and then a margin, let's say, between 3.5%, reasonable fees. I can tell you the equivalent in Europe is probably 10 to 11%, I'm sure Stelios will. And probably here in the US, it's 11 to 12%. So actually, the cost of capital is up. So we're delighted because actually having built those relationships, and now as we're continuing to grow, we see supportive banking partners, and the liquidity is there. If you look at one of the data points we track carefully every month is actually bank deposits, in particular deposits in the 4 Greek systemic banks. When I moved to Athens in July 2020, I think there was around 160 billion across the 4 banks. Today we're approaching 200 billion, and it's a good healthy mix of around 70-75% is households and the rest is corporates. And in a way, and you heard it from the banking panel earlier, that the banks actually have the capital to lend, and it'd be getting a bit of negative press at the moment. I disagree with that in terms of because actually I found them to be really good partners, and I'm now encouraging them. And I'll finish with this. As our companies are getting large and we're consolidating in Greece, and now we're looking at markets outside of Greece, whether it's Cyprus or north of Greece, we're encouraging our Greek banks to follow. We've been acquiring hospitals in Cyprus, for example, and Eurobank has been helpful. There we're looking at acquisitions in the Balkans, and again, our starting point is the Greek banks. So we value the relationship. We want to have a long-term win-win relationship with them, and we'll continue in that spirit.
If I may add a comment on this.
Yes, I was about to come to you.
Sorry.
But please go ahead, because I wanted to hear your perspective also of the fire.
The reality is the energy transition, is investment heavy, right? So if you want to add 10,000 megawatt renewables, you're talking about 10 billion of capex, and the model under which these investments happen has also changed. Now we're talking about PPAs. Our experience has been, despite the fact that the Greek market really had no experience with PPAs, and the Greek banks did not, that they very quickly adapted to that requirement for the investments to happen from not only international players, also local players. So it's not only the capital, the liquidity is there. It's also the willingness to very quickly you get used to other parts of the financing which are essentials for us as investors to take a final investment decision like the PPA.
I will take some credit on that, because my partner Dimitrios, who's at the audience, has educated plenty of the banks about the PPAs. So I agree with you fully. Stelios, coming to you, I want to touch a bit, as we're running out of time, but very quickly on the importance of the exit, because we're talking about investments made. You guys have all deployed great capital into Greece, but traditionally in the past we've had a number of instances where the exit outcome was not what investors potentially envisioned. But luckily, the last year we've seen some fantastic exits. Nikos mentioned Pharma 10. We saw in the hospitality sector, the Sunny Ecos platform and being sold to a sovereign wealth fund. How do you evaluate the exit opportunities in connection with your portfolio?
Yeah, it's a good question, because we've also been bouncing thoughts internally in terms of, in private equity, I'm sure Alex knows it even better than I do. We ask ourselves two questions. So what do I need to believe in when I make a new investment? How do I get from point A to point B in terms of value creation? But the second thing is, how do I monetize my investment? How do I exit? What's the easiest path of monetization? What creates the most value on return on investment? I alluded to it earlier that we shifted from an opportunistic type of investment into something more strategic. So I'm very pleased to see that Greece is on the investment map. We have received a lot of unsolicited bids on our assets, either on a portfolio platform scale or in isolation, and sometimes at significant premiums to our own internal marks. Like Alex and myself, everybody who works in a private equity fund, we have fiduciary duty to our investors to report on the update on our investments, and that includes also quarterly marks. And it seems that we're underestimating the value of our own investments. Now, in our case, I think, given the fact that we've taken a decision to take a strategic view on our investments, it's not about just maximizing, the value in a certain asset or a certain subsidiary of a portfolio, but rather look at the whole ecosystem and see how we can actually maximize the value for investment as a whole. And you mentioned earlier, the EcoSun example was actually a great example of that. How they managed to actually sell a full platform, an ecosystem that can actually continue growing. Because if you have something that is actually very constrained, whether it's a certain portfolio or an asset, there's not much value creation you can have. But if you create an ecosystem that is self-feeding, then obviously sky is the limit in terms of value creation. So, you said earlier, so within that context, we did exit. We had an investment that exited actually even earlier. Our usual investment horizon, typical for a private equity fund, is between 5 and 7 years. We had an investment that exited half the period of that, less than half. But the most important thing was that the value creation of that company was multiple of what, a very high multiple actually, of what the value of the company was before we got involved. And I was happy that actually happened in a year where, you know, we saw a plummeting of European IPOs. We're talking about a drop of more than 90%. I think the figure was, at least when we took this thing to stock exchange, it was 92% drop in European IPOs. And of all places, you know, you had a successful IPO in Greece, which was, you know, by Greek standards, the size of the offering. And the fact that, you know, you're able to do that while facing significant headwinds is to show that, you know, when you have a quality product, when you have a quality company, and I fully agree with Alex around AQ and adaptability. I think, you know, the Greeks, I think we're born hustlers, right? Sometimes in a positive sense, sometimes in a negative sense. But I tend to believe the companies that we invest in is in a positive sense. And that adaptability, I think, is what has been very well embraced by the investment universe. But more, you know, long-term capital. So, you know, we're talking about being more strategic. With the best intention in the world, I will never be able to compete on the cost of capital or on the investment horizon compared to a super fund. So the fact that we're seeing this type of capital flowing into the country at least to show that, you know, I think this type of investments, this type of capital is here to stay.
And it's great that we were able to attract different types of capital and provide these opportunities. A couple of closing points. Panos, 5 years from now, we're sitting here. Tell me what you envision the shipyard investment to reflect at that point in time.
5 years from now. Usually, you know, I avoid those kind of projections because businessmen have to talk through you know, what they have done and through the achievements. Since, you know, we have started an investment in series of 100 million and LFCs is $500 million, more or less. Half of them will return to the state, to the workers, and the other half is infrastructure development. So all of this more or less stays in the country. So after 5 years, I see fully renovated shipyards with technology, with combined close to 4,000 people working. 60% of that will be new jobs. I see also the relations between the two countries, United States and Greece, more tight because in our financing scheme we have DFC, the State Development Fund of the United States involved. So I see fundamentally a lot of great ingredients in order to achieve to have a leading hub for shipping, for energy and defense for the region that will support Greece's and United States and regional efforts for energy transformation and logistic safety.
That's an image we would all like to see. Dimitri, closing statement.
So, listen, I think the creation of an ecosystem is paramount. When we started No Wait, all the international banks, investment banks were moving out of Greece. I think we're the only one standing. Right now, everybody's back to Greece. There were no private equity investors in Greece. Now we have a few. I've worked with all the gentlemen here on my right. In addition, you know, there is, as I said, sovereign funds, pension funds, lower cost of capital that is coming, and finally we have an ecosystem for exits, for transition. You know, Stelios, for example, you know, got involved in very difficult situations very early on. It was absolutely necessary to have this type of capital to help the banks. So he worked with the banks during a difficult time. Now the banks, you know, on a counter-cyclical perspective, are much better capitalized than any other system in Europe. They have the ability to provide credit at good rates, as Alex said. I mean, one big problem all private equity firms have globally in this environment will be the cost of financing and meeting the return profile, having a lower cost of capital in Greece will help potentially to make, to bring more money and potentially make the IRRs work. So I think 5 years from today, I hope we continue this credible path as a country and as a sovereign without a lot of noise, just hard work, and more Greeks getting involved in the country. I mean, it's really great to see that all these international firms are represented by Greeks, making a commitment that is obviously based on the merit of the investment, but also, on the passion to make the country better.
Let's aim for that. All the ingredients are certainly there. Nicola, Olga, Capital Link team, thank you very much. Thank you to the audience and to all of you, and see you next year.